Canada's biggest bank, RBC, recently admitted they caught in the middle of a mortgage rate war in Canada's competitive lending market. This the question is, how did they end up here? What caused one of Canada's banking giants to lose so much ground to brokers and other banks that made a move 20 years ago? And more importantly, how is this affecting consumers like you? Stick around, you'll learn exactly what happened behind the scenes of the mortgage battle and how it impacts your financial decision. The Canadian housing market has slowed down, with fewer transactions taking place in this year. In response, banks are fiercely competing for every mortgage deal they can get. RBC, which once dominated the market, is now watching as its profits from mortgage lending shrink just a fraction of what they once were. And while RBC is struggling to keep up, another major bank made a brilliant move 2 decades ago and continues to siphon the market share of RBC. Curious? Let's explore. The hidden mortgage battle. Recently, RBC's CEO revealed during a conference call that the bank is facing what he's called historic and intense competition. This isn't just any normal competition, it's a fight for survival in the mortgage space. RBC Mortgage Division is currently making only about a third of what it used to, which has alarmed shareholders and executives alike. The main reason for this, a rival bank launched a marketing campaign 20 years ago and still lasting effects today. Back then, and offered an irresistible deal that attracted a wave of new customers. Many of these customers were in their teens or 20s at the time, are now entering the housing market and choosing the same bank for their mortgages. This loyalty shift is costing RBC heavily. While RBC has solid mortgage products, they are not as competitive in some key areas. For example, RBC only allows homeowners to pay off 10% of their mortgage balance each year without penalty. Meanwhile, other banks let you pay off 15 to 20%, giving you more flexibility. These prepayment privileges may seem like a small detail, but they can make a huge difference if you want to pay off your mortgage faster or avoid costly penalties. Consumer alert. Know what you're signing up for. As consumers, you might think this competition between banks works in your favor, and in some ways it does. More competition means better rates and more options. But here's the catch. While a lower rate might seem appealing, it often comes with hidden fees or restrictions that can cost you more in the long run. For instance, you could save a small amount on interest with a lower rate, but if you ever need to break your mortgage early, whether it's to move, refinance, or deal with life's unexpected events, you might be hit with a massive penalty. Always make sure you fully understand the terms before signing any mortgage agreement. This includes knowing what prepayment privileges you have and what kind of penalties you could face. Many people get caught up in the securing and the lowest possible rate without considering the bigger picture. It's important to weigh factors like penalties for early repayment, flexibility in payment options, and ability to finance or transfer your mortgage. What seems like a great deal today could turn out to be a financial burden down the line. Why this matters to you? If you're in the process of renewing your mortgage or thinking about buying a home, this mortgage rate war is crucial information for you. Yes, it might lead to a better rate in the short term, but it's not as simple as picking the lowest one. You need to dig deeper and think about what will serve you best in the long term. Don't fall for the trap. For example, are you looking for a mortgage with flexibility payment options? Do you want the ability to pay off more of your mortgage without penalties? Are you planning a move or refinancing in the near future? These are all the factors that should guide your decision. Beyond just interest rates, focusing on the long-term costs, penalties, and benefits is a key to make a smart financial decision. One thing you should never overlook is the advice of a good mortgage broker, a trusted broker that can shop around for you, find the best rates and terms that suit your needs. Brokers will also have access to non-banking lenders who often provide more competitive products than traditional banks. So even if your bank is offering a tempting rate, a broker might be able to get you an even better deal without the hidden catches or costs or penalties. If you're serious about getting the best mortgage deal, don't settle for the first offer you come across. Take the time to compare options, look at the fine print, and get advice from a trusted mortgage broker. Also, if you're in the market to mortgage a renewal or a new home purchase in the next 6 to 12 months, check with the mortgage broker and please listen to this information. And lastly, don't forget to subscribe to this channel and hit the notification bell so you'll never miss out on the latest updates in Canada's real estate and mortgage market. We've got more valuable content coming your way that will help you save money and make smarter financial choices. Check out the next video right here to learn more about what's happening in Canada's housing market and how it could affect your next mortgage decision. Thanks for watching. I'll see you in the next video.